In today's show, you'll hear investor perspectives on the COVID-19 impact on the cannabis market. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. Cannabis is currently gaining regulatory approval across the U.S. The lockdown has declared certain sectors, including cannabis, to be an essential service. We have investors and startup founders describe the impact of COVID-19 on the cannabis market. I hope you enjoy this episode. My first guest is Matt Nordgren of Arcadian Capital. So let's talk about COVID-19. It accelerated several sectors across the economy. Cannabis was declared an essential service. But what do you see was the impact of COVID-19 on the sector overall, both short-term and long-term?
Well, short-term, it was answering a question that we all had, which was, is cannabis recession-proof? I think we all said yes before. Now you certainly have enough data to say yes. But to take it a step further, are we pandemic-proof? Which is an entirely different thing for many industries. Alcohol, for example, has done well in some avenues like, direct-to-consumer or delivery or retail. But in a pandemic, separate of a recession, they lost a significant portion of lines of revenue without having commercial businesses open. And so cannabis didn't have that, however. You can't consume cannabis commercially or publicly, socially. So it's meant to be in a private setting, which was kind of perfect for a pandemic and a recession. So I think we've even taken it further to have the comfort around the data to say the industry is great, it works, we're now essential, which changes everything. And then I think also in the short term, you see consumer buying patterns that are really interesting from a behavior standpoint, different geographic, demographic regions, buying larger purchase pattern products and baskets than they did before. Within those, unpacking that, you're seeing products that they didn't normally buy, experimenting with new products. So all this is very encouraging in the short term. I think long term will change is that it's largely been a grassroots campaign forever. I think now you're going to see grass tops. I think you're going to start to see pressure, and we're feeling it every day, from institutional type resources or Fortune 1000 companies or large family offices or asset allocators or managers in the world that are reassessing where they're going to put resources going forward. And cannabis and hemp as an alternative class is very attractive, very attractive. So I think you're starting to see the future unfold a little bit, but all I can tell you is that when that conversation starts for different folks in the industry, whether you're a lobbyist, an operator, a financier, environmentalist, it's going to change. And you can't wait to get back to market to have a conversation with the new tools in your belt, the essential business tag, the need for tax dollars, the human element, the desperate need that humanity wants to be healthier, the tax revenue that we've got to figure out. I mean, there's all these things that I think long-term, if you study 1933 from an alcohol prohibition standpoint, it seems eerily similar. And so the grass tops aspect, I think, is what the future we have to pay attention to. And that is quite possibly the last piece that really moves this thing forward in a massive way.
I know it's great growth rate, it's essential, and it's moving forward, but what new things are coming out of it that may have surprised you?
Well, I don't know if it's surprising. Once we got the essential business tag, then you could sort of anticipate a number of things happening, right? I mean, if you're a cannabis consumer, you only have two ways to get product. You either go to a licensed retail or somebody who's licensed brings it to you. And so we expected the path that is bringing it to you to increase naturally, right? So that happened. I think all that I can tell you is that we were encouraged by what we had hoped for and planned for happening did happen. Deliveries picked up. They've grown significantly. You've, been able to see retail stay alive. In the early days, I think we were pleasantly encouraged with how battle tested and ready these entrepreneurs are to solve any problem within weeks. Every location we could think of already had a plan in place with how to do social distancing and do curbside pickup. And, it was fascinating. But unlike alcohol, we only had two lines of real, consumer revenue to be concerned with. solving. Whereas if you're in a more mature industry with a lot more points of revenue to serve your consumer, there's a lot more to try to figure out. So I think we benefited by that, just having less problems to solve and having entrepreneurs who are ready for the challenge. I mean, and they still are. I mean, every year, every quarter, it's something. Obviously, the pandemic in a global perspective is a much bigger deal to the world, as it should be. But for cannabis being essential and being able to operate, it's actually not even been too much worse for the industry than other things that the industry's experienced. So that continues to be mostly encouraging on the private side, is that these entrepreneurs and the resources and the people backing them are prepared to pivot.
My next guest is Ben Larson of Vertosa, an advanced infusion technology company in the cannabis space.
Yeah, it's been quite the journey. I would say from a high level, public perception has had the biggest opportunity for growth. To recently been legalized in many markets, but then to be declared an essential business and to be supporting the community as we navigate COVID has been a really big step for the advocacy movement. Not only being essential because it's used in medical, but people finding recreationally that they need a little bit of stress relief, and turning to alcohol isn't always the most helpful. More on the business side, I'd say that delivery, direct to consumer, really owning the connection to the consumer has been a big opportunity, as well as kind of the growth in categories of non-smokables. So people looking for a little bit more of a discrete consumption method. So edibles, beverages, topicals, that sort of thing. And then finally, going back to the high level, a lot of us that have been in the industry for some time have been, considering that the industry might be recession proof. And while I think we still have a little bit of ways to go on this journey, there are positive signs that cannabis can survive through a recession and again, be a consumer packaged good that the consumer reaches for.
My next guest is David Hess of Trust Capital. So you're in the cannabis sector, and of course, during the COVID economy, it was deemed an essential service and was getting quite a bit of interest from investors as well as users and so forth, and is really taking off. And just wanted to talk about the lockdown and the COVID-19 and how that impacted the sector itself. And so what was your initial thoughts about that?
Well, it's an interesting question. We've seen both positives and negatives. Certainly at first, we saw somewhat of an uptick in cannabis purchases in a few states, many of which were deemed essential. Some of those states, in particular Massachusetts, for example, only did that for medical, and adult use was put on hold until late May. And in other states like Nevada, right, where tourism plays a massive role in consumer habits, you had retailers like Planet 13 really just kind of stocking up on inventory until the state allowed them to start processing orders via curbside, right? And eventually some states that weren't allowing for delivery started allowing delivery. The biggest positive certainly was the fact that most states recognized cannabis as an essential business. And so that was a big win for us. And then another variable that we're going to have to wait and see how it plays out certainly would be how this affects the federal legalization and the prospects of certain states that lost tremendous amounts of revenue, tax revenue due to COVID and all the job losses, right, that we've seen. Could legalizing cannabis be an answer for, and resolve both of those issues? Potentially. So the story is still being written on how COVID-19 is going to affect the industry, but I believe overall it's going to be a bump in the road versus, bringing us back to, 2010 or even further back, right?
And my next guest is Marcus Estes of Chroma Signet, a technology company in the cannabis space.
Boy, I tell you, the cannabis industry, from being deeply embedded inside of it, the reaction to COVID has been fascinating in a couple of ways. It's a bit complex. And of course, my view on it is limited, as everyone's are, but I can make a couple observations. Number one, I think the most important thing to note is that cannabis had a great gift handed to it when it was deemed an essential business. That is, of course, that's a state by state determination, but in California in particular, the larger markets, importantly, the dispensaries have been allowed to operate from the beginning. And, I think some of the justifications there are valid. We've got certain people that are relying on it for their medicine. That said, of course, most of the consumption is recreational. And so what we've been able to see is how do consumers react to this very novel situation of being trapped inside in a different pattern. And of course, increased substances, that's just been also part of the deal. People are drinking more, people are kind of eating more. And yes, it is true that in the aggregate, people are consuming cannabis in greater volumes. So that's kind of the first thing to note, is that just on a very bottom line perspective, on a recreational side, consumers have increased their consumption of cannabis. Now, there have been winners and losers, of course, within that. And this is interesting. So I would say that a lot of the dispensary business has actually been pretty disrupted. Those that have been in a position to have their cannabis delivered to them, that is a form of retail distribution. A lot of business, this is kind of like the Amazon effect. So businesses that, for instance, like Ease is really the number one delivery company. In the California market, Ease already had a pretty strong foothold. They were the largest retailer. If you see them as a retailer, they already had 10% of the California market. And they have not yet, they're privately held, so we don't know for sure. It's possible they may have doubled their market share throughout this process. So just by factor of people not wanting to leave their houses, you've got tech companies doing well. That's kind of mirroring public markets as well. And then, aside from this, I could say, I think there's probably always shifting fortunes inside of the various cannabis formats. I have not heard of particular formats better suiting consumers in the COVID area, other than, normal changes that are happening in the market. But it's always interesting to see, because consumption patterns, cannabis is still young enough, just patterns are still changing. And then we're going to look for correlations. Are people changing their consumption habits because of COVID, or is this just, regular customer experimentation? Those are some high level changes I'm seeing.
What was the impact of COVID on the supply chain? Where did it hit, and what did it do?
So I don't want to speak authoritatively about this, because I'm from the perspective of an ancillary, tech company looking into it, but I can give you some anecdotally assembled pieces here. Well, here's the thing, it's not like this is a weather event, right? And of course, consumption has been good. So you think, why would there need to be disruption? I think probably, hopefully you'll get other guests that can speak to this on the ground level, but I think that probably the scary bit has been the private financing. The fact that cannabis has to rely upon the sources of capital that it does in order to, the growth capital that it has, it's the larger MSO, as they say, multi-state operators tend to start to get access to something like capital markets once they get to a certain escape velocity. But the smaller brands are, it's a harder thing to fund than even a tech startup, which can be very hard as well. So we don't have, we're in tech, we've got, angel networks, such as the one here, I think, connected to this show here, right? There are cannabis angel networks, but they're a lot younger and they're less well organized. So, frankly, this should be an opportunity for investment if you think about it. We've got strong fundamentals. We just have problems with flow of capital. Basically, I'll tell you a story without naming names here. One of my customers is a great brand. They do, it's good product. They've got a great social equity story, which is something I'd also like to talk about later. But, their situation is they were going into market trying to finance, in this case, the purchase of ingredients. And so the lack of capital in cannabis, the capital has to be on hand. You can't say, hey, can I get you an order 3 months from now? There are some cases where you're literally showing up on site and doing a cash transaction with the farmer. If the capital is slow by 1 day or 2 days, sometimes you can lose that deal. And then you're hunting around in a very inefficient brokerage market to find your flower, and that flower may be destined for, a pre-roll, or you might have further transformation if it needs to be, for instance, extracted and distilled into a vape format. So it's basically just-in-time financing is really hard, if this makes sense. That's just some kind of anecdotal observations. is still the Wild West. It's still hard to buy product. And if you don't have a steady line of credit and you have to line up private investment, things can go south.
My next guest is Narb Alexandrian, a venture capitalist from Canopy Rivers.
If you take a step back in March when everything started shutting down, the first step to do was to take account of how this would impact a lot of our portfolio companies and partners throughout the ecosystem. So we took a few weeks to a month to really understand how to position our companies so they could hold on to some of the volatility that was taking place within the markets, as well as make sure that they had enough runway to get out of this thing, call it by early 2021, to what we think is the new normal that's going to emerge. After that, we went into the market and just saw an incredible amount of opportunities out there from a deal flow perspective, companies that needed to raise during that period of time anyway, but now we're coming into a market during a very unfortunate period, which meant that there were good deals to be made within the ecosystem. However, we're also finding that there were some companies that just didn't think COVID was going to last the full year that we thought we still think it's going to take. And we're listing at valuations of pre-March of 2020. So we decided to take a seat and just watch how things progressed over the last few months. And the valuations have decreased. The median amount of money being raised by a company pre-COVID was about 4 million within the cannabis sector. Post that, it's been about 2 million. And we've seen about 2,300 pitches to date over the last 2 years. So we have some really good data just to see how things are progressing. Companies aren't looking to raise more than they need at this point. Companies aren't looking to dilute themselves more than they need at this point. But at the same time, there's been this vast amount of opportunity cost that's been created for investors in the market because it's very difficult to decide which vehicle you want, what company you want to invest in, and what vehicle you want to invest in when there's so many opportunities out there in this day and age. It's key to note here that there is a bifurcation of what the capital markets or Wall Street is showing on cannabis companies publicly versus what's happening on Main Street, which is what's happening on the till. While a lot of the public cannabis companies are struggling to raise their stock price and shareholder value like they had once done before in such a lucrative market, what we're seeing on Main Street in the tills is that cannabis has become super resilient during a recessionary period. It had a 20% increase in March alone. In April and May, it still kept the pace that it was going at. And it's been tremendous to see how this industry has proliferated when much of the rest of the economy has really slowed down.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.